Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to go over Twitter, kind of some information that I've got going on there. We'll go through it. Some of it's kind of funny, I think. And just for everyone to know, my Twitter is at finding_finance. It's this guy right there, at finding_finance, if you want to join me on Twitter. So let's jump in there. We've got Josh Young. It says Bernstein, Brent crude may rise to $150 a barrel. What that's doing is we're getting stuck at like the 115 mark. Once we break past that, which it looks like we potentially could, and remember, we could do a retest on it as well. But once we break out of there, I think we'll go back and retest the highs. Keep in mind that if you want to gauge the health of any market or commodity, just look at inventory levels. If inventory levels are very low, I mean, that right there is your proof between the demand and supply dynamics. If you're eating through inventories, that means that your demand is greater than your supply. It doesn't matter what fictitious stuff people will make up. Oh, well, what about the people that people are earning? And what about this? And what about how much this? It doesn't matter. None of that stuff matters. Just watch your inventory if it goes up or down. That is your proof. Doesn't matter what the other things and the other opinions are. It just matters if the inventory is going up or down. Affordability on real estate does not matter if your inventory continues to decline. It means that there's more buyers than there are sellers. And this stuff takes time to unwind. It's a gigantic Titanic ship that needs to turn around. And it's going to take years, not months, in my opinion. Same with in the inventories of oil. It's going to take years to fix this. I don't think it's going to take months. And remember that oil is highly correlated to the 10-year yield. If I were to pull up oil prices and 10-year yields, they, for the most part, track up and down together. If oil is going to go to 150, what do you think that's going to do to the 10-year yield? Probably go higher. Looking at this, I thought this was kind of funny. It says Bob Nugget is 100% sure for a red Tuesday. This could really get out of hand. Eric's kind of making fun of Bob Nugget. He's 100% kiss your lucky Green Day and oil goodbye. And he thinks it's going to go down. Obviously, we're going up. And I don't know why, some of these guys on Twitter, whoever it is, people can call themselves contrarians, and it doesn't necessarily matter. It doesn't matter what you label yourself. Doesn't matter what name you fictitiously give yourself. All that matters is that you're right or you're wrong. And in the short term, it can go either way. It doesn't matter. If you're saying, this is for the next day, and no one knows the next day, I think it's kind of ludicrous to try to do that. But usually, I mean, if you're going to play the markets, you want to pad yourself with time. You want to make a call based off of the CRB index to S&P 500 ratio. Basically, you want to look at the trends. You want to see how the trends are changing, and then you position yourself, and then you wait. The short term can go either direction, and nothing in the short term gives you a high percent probability bet. It's always very low. So you have to pad yourself or hedge yourself with time. At least that's what I do. Get the trend right and hedge yourself with time. And this is what's crazy here. It says it's waiting that helps you as an investor. He's hedging himself with time here. And a lot of people just can't stand to wait. Charlie Munger. Agreed. A lot of people can't stand to wait, and that's why they lose money. They are impatient. And I guess I am missing that emotional gene. Like, my emotions are rock solid. They're steady. They've always been steady. My parents, at least my mom's emotional stability is insane. And I think that's maybe why I do okay in investing, is because I don't have that emotional ups and downs. I mean, I feel it, but I can control it to the nth degree maybe. And I stick with logic because, I mean, that's just what makes sense. And emotions will ruin your returns. And patience, being impatient, will as well. It says that's going to leave a mark. This is crude oil as it breaks out to the upside. We've got James Sykes. He's the CEO of Baseload Energy. Baseload Energy is one of my largest exploration holdings in uranium. This rarity of near-surface mineralization with high levels of radioactivity sets Baseload apart from our peers, as there's no other recent discovery this close to the surface. Now, my question then would be, well, how much do you think this is worth if they find a big old deposit very near surface in the middle of a uranium bull market, which could be one of the biggest bull markets in an energy crisis world? Well, what's that going to be worth? Probably quite a lot. Hopefully it's a big boy that they found. That's all we can say is hopefully. They'll define the deposit. They'll see how big this bad boy is. And hopefully it's a big one, because this will be ultra valuable in the market conditions that we are in today. Looking at this, we've got Bannerman. Bannerman's one that I've been talking about on the website that was down. It says the slingshot in the opposite direction usually follows. What we do is you create this pattern, you get a false breakdown, and then next you get this slingshot. That's what they slingshot pattern. I put the cheetah in there. I call it the slingshot cheetah. So you come down, you hit key support, you come back up, and then you slingshot below. You get a nice big wick at the bottom, and then it rockets higher. That's our false breakout patterns. This is the slingshot cheetah is what we call it. Scott and I have been talking a lot about uranium and how these are doing false breakdown patterns. And we could potentially be heading higher here at some point at any time. Tony Greer says, energy prices are set to blow minds this week. I love that there is still a bearish camp out there talking about demand destruction because it helps you stay in the trade. What he means is most people are pretty much wrong. They think that, demand destruction. Just look at inventories. Are inventories increasing or decreasing? They're decreasing. No demand destruction. The demand destruction is not greater than the supply yet. And that's all that matters, is if you're adding or subtracting from inventory levels. If you're subtracting, you're still in a bullish scenario. And remember, one data point doesn't make a trend. Some people have one data point. Let's say it goes back up, the inventory. They'll say, look, it went up. It's like, that's not a trend. You need to still sit and wait. You have to wait till the trend has changed. Energy commodities continue their run again after a pullback with the fight against inflation market crash. It seems nothing's going to stop uranium in the energy commodities supercycle. We'll see. We'll see what happens, but I'm very much bullish. This is the weekly percent increase. This is your percent daily. UK gas is continuing to rocket higher. Crude's getting up there. This is actually at 119 or 118 or whatever it is now. Uranium Corgi. I like it. Just curious, anyone in pound uranium buying Luna 2.0? In 2009, Bertie Madoff lost investors $60 billion. He was sentenced to 150 years in prison. In 2022, Do Kwon lost investors $60 billion after Luna collapsed to zero. He then created Luna 2.0. Yeah, pretty messed up. And I don't know why anybody's buying Luna. I mean, I don't know. The whole crypto space, I don't understand. I don't understand it because it's stupid. I understand it and completely understand it from the white papers and what it is. Yeah, I get that stuff, guys. It's just still stupid. WTI oil was close to 119 a barrel. That was an hour ago. It was at 118.72. Rocketing on higher. This is the chart that I was talking about. We talk about on our daily updates. This is a resistance zone. It's 100 to 115. It was basically the turning points of all these guys here. It says if the oil price passes through this key resistance zone, it's likely headed to 147, which is this previous high. The bullish descending wedge told us what was coming. The false breakdown confirmed it. The breakout then took place just as the chart suggested it would. Weight of evidence. And then you can see the volume on the right-hand side. This is the volume traded. Once you get above this volume area, things will start to loosen up and break out. And that's that resistance area with that big volume here. So that was oil. Here's Ferg. A faster transition to renewables would also help prevent surging power bills. The fossil fuel plants that we have today generate very expensive energy. They are the reason that your bills are going up. Mike Cannon-Brookes. And what he says is reality would argue otherwise. This guy is completely wrong. He's probably on some sort of, I would say, drug, because the exact opposite is what is happening. Exhibit A is Germany. AGL needs to shut coal-fired plants by 2035, Cannon-Brookes says. Billionaire climate activist seeks to renew board of AGL. Cannon-Brookes led successful campaign to set up AGL demerger. And we've got another one with Market Sniper talking about oil going up. I posted here, physical platinum is going to be a good investment. Physical platinum basically has a wedge that's broken out into another falling wedge that's about to break out. And then it's going to be game on. Game on like Donkey Kong. Boom! So I think platinum is going to be the precious metal to have in the short term and medium term, maybe depending on what you consider to be long term. I'm talking about commodities. Energy service companies are a great opportunity right now. If you need help with specific picks, join the Platinum membership. This is it breaking out of its basically the decline or descending trend line, falling trend line. It's breaking out. That one looks really good. Another one, I talk about rare earth metals. This guy is still doing kind of the back test thing, looking really good. And again, if you guys need help, you can join the website, Platinum membership. I did a little poll. It says, where are the best investments right now? A lot of people are liking uranium, precious metals, and oil. Not too much love for natural gas. Maybe that's well-sided. Maybe that's how it turns out. Of these four, my opinion, short-term oil is going to do well, but I think for value, precious metals are probably the best at this moment, and uranium for value-wise. Value for risk-reward, uranium's really good. Precious metals, I think, ultimate value. I think they're the laggards of the group, and that's probably where I'm going to be putting more and more money is in precious metals as time goes on, and oil continues to go higher, natural gas continues to go higher. So I'm going to probably start switching more money into precious metals investments here soon if oil continues to rocket higher. I said for energy, we are going to see higher prices on energy here in the short term. We are breaking patterns and it looks very good for oil, natural gas, and uranium. Hold on to this bull market, everyone. If you need help holding on, obviously you can join the Platinum members. Interest rates perhaps heading higher short term. Higher rates, higher oil price go hand in hand. And this is a declining wedge. I think rates will probably move to the upside here, along with oil moving higher, because oil's been moving on up. So I posted that as well. I also talked about the dollar weakness in the short term, and I think lower dollar going forward, fuel for the fire. And this could bounce around, but overall, the general trend, I think, will be lower over the months. If this is the top that I hopefully think it is. Again, I know that hope isn't a strategy, but I every time I see this, I usually see the dollar decline as the commodity bull market progresses. We've got, it has now hit the triple support back test for the third time, and this is GDX on the weekly. GDX is creating this, 1, 2, and then a third hit on this big kind of swooping pattern here. We've got a retracement of 61.8%. Again, I think the precious metals are a great spot to be looking at this time for potential investment. The commodities index, CRB, is up 200% since the bear market low I called in April 2020. The majority of commodity companies are up many multiples of that. And this is when the DXY has not even begun its historical decline. When that dollar drops, guys, I think we are going to be in full rocket mode for the commodity sector. So that's what I've got for today. I just wanted to hit on that, show you guys kind of what I'm seeing in the markets. Again, I'm a huge bull in commodities still. The inventories are still declining. And I think that you just have to sit tight. That's all you got to do. Just sit tight. If you guys like the content, give me a thumbs up, subscribe to the channel, subscribe to the website, the Platinum membership down below. We'll do our weekly calls. I'll probably have to modify it this week because I'll be traveling on Saturday, and it might have to be on Sunday, probably later Sunday. All right, guys, we'll catch you next time. This is finding value.